In this video, I'll go through Work Together problem 14-2 on the topic of completing the statement of cash flows. And this is from page 417 of your Century 21 Accounting Advanced book, edition 11 by Gilbertson Lehman. So credit to them for this book and this problem in specific. Okay. So we are using the working papers. I'll just scroll a little bit over here. From 14-1, so the same workbook, right? A comparative balance sheet and forms for analyzing changes in long-term assets, liabilities, and stockholders' equity are provided. And I'm going to guide you through this. Okay, complete the changes in the long-term assets and long-term liabilities form. So that's this here. So first asset, office equipment. So we'll just click equals sign and this current year office equipment, enter. Store furniture, building, and land are also from the same section, so we can just autofill that down. And then we can autofill over because these are all long-term assets. So we'll go ahead and fill that in. Long-term asset meaning that we plan on having them for a long time, over a year, right? Okay, so an increase or decrease equals current year amount minus your prior year amount. And we'll just autofill all the way down. Okay, now we have two liabilities. We know that because they say payable or because they're in the liability section, right? So we have mortgage payable equals, we'll click on that amount, $62,500. Bonds payable is right below it, so we can autofill down and then autofill over. These are long-term liabilities. And if we made this a little bigger, we could see the rest of the words, right? Okay. And now we will come over. We have to figure out if they're a source of cash or a use of cash. So if we look at our book on page 412, it explains increases in long-term assets generally result in cash outflows, which are uses of cash, and they are subtracted on your statement of cash flows. Decreases in long-term assets result in cash inflows or sources of cash. So you just have to think about this in theory. If we have a balance of office equipment going up, we've used cash to increase that balance, right? If we have none of these are going to be decrease amounts. So these are all going to be uses of cash because we've spent more money to build up our balance of office equipment, store furniture, and building is a wash. Okay, so this is a use of cash. So liabilities are a little different. The book explains on page 413, increases in long-term liabilities and the issuance of stock generally result in cash inflows or sources of cash, and decreases in liabilities result in cash outflows or uses of cash, right? So if your mortgage payable is balance went down from prior year, right? It's a $7,500 decrease, then that's a use of cash because we had to use money to pay that down, right? And same thing here where the land is a use of cash. It looks like we paid it off, right? Or we sold it, I guess, if it's land is an asset. Okay, bonds payable, that balance increased over time, so it probably is a source of cash. And that is the end of this little section. And the next thing we have to do is complete the changes in stockholders' equity form, which is down here. Okay, sale of additional common stock. I believe it might have told us this. The book didn't tell us. The answer key actually had this amount given. I thought we had to find it. It's 10,000 here and 5,000 here. Okay. So if we sold additional common stock of $10,000, that's going to be a source of cash, right? We had money coming in from the sale of that stock. And if we paid a cash dividend of $5,000, that's going to be a use of cash because that was cash that went out to do that. Okay. And then we will prepare the financing activities section of the statement of cash flows. And I'm going to do what I did last time and put these next to each other so that you can see it better. All right, so I've got my same workbook here, but the balance sheet and questions on one tab here and the statement of cash flows on the other tab over here. So we are going to do our investing activities section. So cash flows from investing activities, right? Okay, so first thing we have is office equipment, and this was an increase in office equipment or an addition to office equipment. And that amount was $3,000, but it's going to be a use of cash, so we'll put it in as a negative number. Okay, now we have an addition to store furniture. Same thing, it was $3,000 addition, use of cash. So we'll put it in as a negative number since it's a use. And then looks like we sold our land, so we had proceeds from sale of land. And that is $12,500. And that is cash increase, so we'll put it in as a source of cash, positive number. And let's see, that is our investing activities. So we'll put our cash provided by investing activities. And then we can just add them up over here. It equals sum of these amounts, gives us a positive 6,500. And the next part we need to do is the financing activities section, right? Last section. So cash flows provided by financing activities, and we have mortgage and bonds to deal with. So our first one will be repayment of mortgage, right? Because we paid down that mortgage balance, so that's going to be a use of cash of the $7,500 difference. Okay. And then it looks like we must have issued additional bonds of $5,000. So we'll call that one proceeds from issuance of bonds. And we got cash from that, so it's a $5,000 source of cash. And now we'll come down and deal with our stock, also in this financing activities section. So we had proceeds from issuance of stock. We should probably say it's common stock. And those proceeds are $10,000. And then we paid a dividend. So we'll call that a payment, or just dividend payment maybe. Okay. And that is a use of cash, so a negative number for $5,000. So cash provided by financing activities, and we'll do the sum function to add these together. 2,500 is the net amount. So we have a net increase in cash if we add all three of these together of $28,880. So now we have to figure out if it ties out to our cash account for the year. So cash balance, beginning of period, and cash balance, end of period. To find that, we'll look back at our balance sheet. So cash balance at the beginning of the period looks like it was $20,500. So this one, we can just put in the $20,500. And was the ending period balance correct? Let's add these together. The increase in cash plus the beginning balance, $49,380. And that was the ending balance, $49,380. So our statement of cash flows works. It's in balance. If it didn't, we would have to find our errors, right? So for this ratio section, I'm just going to go back to having only one workbook open. So your operating cash flow ratio, page 415 explains how to calculate it if you don't remember. But it is cash flows from operating activities divided by current liabilities. So equals cash flows from operating activities divided by, and then we may have to click over to our other tab, which I can't see. Oh, here it is. Okay. Current liabilities is $35,300. Enter. Okay. And so that's 0.56. Probably don't need that many decimal places. 2 would probably do. All right, cash flow margin ratio. And that one is calculated as cash flows from operating activities divided by net sales. So equals your cash flows from operating activities. And then our book told us what the net sales was. So it told us the net sales equals $24,645. So 24,645. Okay. So 0.81 is that ratio. So operating cash flow ratio of 0.56. This ratio tells us how likely the company is to be able to pay off their current liabilities, and a ratio of 1.0 or greater is desirable. So not the best, 0.56. Cash flow margin ratio of 0.81 tells us that the amount of cash flow from operations for every $1 of sales. So 0.81, that's not 81 cents, that's like 8 mils, okay? So that is the end, I believe, of the work together problems. So the on your own is going to be very similar, but I'm going to let you do that on your own.